Greetings, everybody. Welcome into Mining Stock Daily in this week's long-form episode. This is an interview I conducted back in London. Unfortunately, I've had to sit on it for a little bit of time because it runs more than an hour and about 15 minutes. I got to sit down and interview one of the best journalists and columnists in the entire metals and mining space, Mr. Andy Holm from Reuters. It was a delightful conversation. I talked about his background, beginning talking about this very niche sector, and then how he established his career moving into what he calls now the most exciting time for minerals and mining. It's a fantastic conversation. Listen to it in its entirety. There's a lot of takeaways. We talk geopolitics, we talk history, we talk entrepreneurship. So there's a lot of worthwhile in here. Special thank you to Arizona Sonoran Copper, Fireweed Metals, and Western Copper and Gold for their continued support of the podcast. And if you wouldn't mind, hit that like, subscribe, share with like-minded investors as well. We greatly appreciate all constructive feedback. Here's my conversation with Andy Holm. Have a great weekend. Be well. All right. It's not very often when the interviewer becomes the interviewee, and I get to regain my role as the interviewer, and I'm actually happy to welcome one of the, if not the best metals and mining journalists in the world today. His name is Andy Holm, and he works for Reuters. Andy, welcome to the podcast. Thanks for doing this.
Thank you for having me. Nice to see you.
It's nice to see you, and thank you for welcoming me into your beautiful home, and got me into a new part of London, which I'd never seen before. So lovely to be here. I'm hoping. Listen, obviously, there's a lot within the metals and mining industry I want to cover with you, but I'm hoping we could spend a little bit of time and maybe kind of get a little bit of profile on you and your work and your career. Actually. Did you wake up one day and said, I want to be a journalist, but I want to work in metals and mining?
That's a great question, isn't it? I can tell you exactly how it happened. We're going to go back all the way to 1987. Okay. And I was working as a temp, as we call it, temporary worker in the city of London at that stage. A friend of mine called me up. I hadn't seen him for a while. And he was working for an outfit called Metals Week, USI magazine, with a couple of guys in London. His boss had just walked out on no notice. So as it was in those days, his big boss from the US called him up and said, right, you're the new boss, get someone to work with you. And he called me up and he said, how would you feel about writing for Metals Week? And I have to say, my initial reaction was, I had the impression of what we're going to be comparing 20 millimeter steel piping with 50 millimeter. It's not really for me. But he said something very interesting. He said, it's more interesting than you think it's going to be. Yeah. So I joined, mainly because it paid me a lot more than I was earning at that stage, right? And I have largely stuck with the metals beat ever since. I have, for Metals Week, which was run by the McGraw-Hill organization, I moved to an outfit in 93 called Knight Ridder Financial News. Long gone now, that became Bridge, which then went spectacularly bankrupt in 2001. And I then set up my own company called Metals Insider with a buddy of mine from the markets. And we were just doing a daily newsletter, website and all that. And we were purchased by Reuters in 2008. So I kind of sold myself as an asset to Reuters. And I have been there ever since. Again, really sort of my core beat is to cover those metals which trade on the London Metal Exchange, the base industrial metals. What I've noticed over, of course, the last 5 or 6 years is my brief has steadily expanded as we kind of enter the energy transition period. So I write about lithium now, cobalt, manganese. And it's a constant sort of bone of contention between me and my boss. I started off writing about 6 metals. I'm probably running about 12, 13, 14 metals now, right? But that's interesting because I spent most of my career, when I met people at parties, what do? I write about metals. Guess what everyone asked me?
Unless they turn around. What do
you think about the price of gold? Right. The one metal that I have never covered is the gold, right? You don't have that conversation anymore. Everyone knows about copper. Everyone knows about tin. I mean, because it's my view that we're entering a new industrial metals age. Yeah. If we want to decarbonize the world, the only way we're going to get rid of fossil fuels with existing technologies, we're going to use a lot of metals, a lot of different metals, and a lot more of metals than we ever did before. So one of the nice things for me is that, I kind of feel that, 30 years of work have been vindicated over the last few years. Suddenly metals are the really hot thing. Right. We punched off from being a very, I would say, niche market, even within the commodities sector, to something much more mainstream now, which I'm very much enjoying writing about it, as I said. And no one asks me so much about the price of gold anymore. Right, and I still don't know about the price of gold, by the way, before you even think about asking me about the price of gold.
It's looking pretty good right now, Andy. I think before I checked before I left the hotel to come here, it was at 2,060 US. That's a pretty good move. So we're not going to talk a whole lot about precious metals, but kind of talking about this evolution of a career you had, and you talked about kind of being in it as independently before selling to Reuters and now being a part of Reuters. How has that, back in the 90s and early 2000s, tell me about that business of being an independent metals journalist. I mean, because you were an entrepreneur then, and so you were responsible for bringing for your own livelihood, right? And so how was that business different then as you kind of see it now?
It was much tougher then. If you look at the technology we were using, the web has evolved so fast and so aggressively. We've gone from a position, metal markets would just be one example of this. You could probably take any commodity and say the same. The level of public information was almost zero. Right? No social media. No social media, but also, this was a very sort of closed shop market, the London Metal Exchange, right? It didn't trust the media, full stop. You had to work there for years before anyone actually you became an honorary member of the club, if you like, right? There was very, very little, information put out there relative to where we are now, right? It still astonishes me how easy it is for me to go on the web and then, and find out information. In the old days, there's only one way of doing that. You had to pick up a phone, or you had to go and meet someone for a coffee or a beer. There was, very old school, if you like, right? And so from that point of view, it's changed 100%. And I kind of wish I had the tools that we take for granted now when I was running my own company, because it was really a case of having to reinvent the wheel all the time. As I said, there wasn't really the internet. There wasn't this kind of distribution of information we sort of now take for granted in the markets. As I said, it was very closed, it was very secretive, very opaque, and you really had to sort of put your time in a market like that to earn the trust of those people operating in the market, right? There used to be a joke that the only time the London Metal Exchange hit the headlines back then is when something disastrous had gone wrong, right? So, and then they just closed ranks against the general media trying to find the story. I think even now, just on an individual basis, people have evolved, societies evolved. Even, trading houses are much more open to talking to the media now than they used to be back then. In all honesty, I made several calls as a junior reporter to key traders, and you just get a 2-word answer ending in off, and the phone gets slashed down on you, right? That was not uncommon. It's like, how dare you? Who the hell are you to start calling me asking me about my trade, right? It was quite a hostile environment to work in. But if you put the hours in, you put the time in, you kind of met the people, you kind of build up your own you became part of the club. Not fully, just kind of a press member of the club, right? And I guess I was quite unusual insofar as I stuck with the beat. A lot of people kind of transited through metals to go into something more sexy, if you like. As I said, I mean, I don't think there's anything more sexy than base metals at the moment.
Well, so you're back when you're independent. Was the revenue model based on subscriptions? Were you selling advertising? And
Man, we chased every check that came in.
Sure, you had to.
Our business model was constantly evolving. We started off as we were trying to do a revenue model. It didn't work, to be honest with you. And then we went to a sponsorship model. I mean, the long and the short of it is, Trevor, like, if it had been more successful, I probably wouldn't have sold it at the time I sold it. And by the way, it didn't make me a millionaire, and I'm not sitting on a beach somewhere, right? So all I did is change my credit rating quite a lot.
I'd come interview you on the beach if that was the case too, Andy. But
no, I mean, so, you know, it was a tough environment for a small independent company to be operating. People loved our product. But this is a difficult market to get money out of people's pockets, however much they like their product, and that's never really changed, right? So we gave it a go for 5 or 6 years. It was tough, and we were frustrated at our inability to sort of like to be investing as much as we wanted to be investing. So when we kind of entered into talks, actually when I started talks with Reuters, I was looking for a strategic investor. And their initial reaction was, we don't really do that. So we were talking to some other guys at the time, and Reuters, surprisingly to me, called me back and said, we've had a rethink. We're not going to take a strategic stake. We're just going to buy you. That's it. Yeah. And then, oh, okay. You know, I mean, it was that time. I mean, you know, we were looking, we were kind of struggling to raise the revenue we needed to progress the business model we wanted. I mean, what we really wanted to do was make it more of an internet thing. And again, you know, another example, I mean, to say set up a website and a pay-per-view website in those days, we took that for granted now. It's, you know, off-the-shelf technology. You had to build it. Right. In those days, right? And to build it, you needed designers, and of course, designers cost money. So everything was difficult, if you like, relative to where we are now. I wish I could realign the evolution of technology to when I had the company, and it would have been a much easier sort of like, I mean, a project to sort of like really make more effective, if you like. But it didn't work that way. I ended up selling it to Reuters. I wasn't massively optimistic at the time that I would have a long future at Reuters, but hey, I'm still here, right? There. I'm still there.
Yeah. And you were printing physical print.
Well, we were actually we were sending out a daily newsletter using Acrobat Reader in those days. Yeah. Okay. And a very basic website model. Yeah, but we never really had the money or the skill sets to take that where we wanted to. And I think Reuters saw the potential in that. Yeah.
Well, and you were deeply involved in this industry in a time where I would argue was very transformative for the metal sector, and this would be, you know, the 80s, 90s, Mark Rich area, the fall of the Soviet Union, where everything kind of came to shambles, but then kind of evolved into the world it is today. You know, that had to have been just an incredible time. In hindsight, looking back at it, and be like, oh my God, if I would have known what was about to happen, like, how would you have approached that differently?
I'll tell you a little anecdote, right? So when I joined Metals Week in 1987, so the most junior reporter, if you like, within the team, guess what they gave me out of the base metals? They gave me copper. Because copper was a sunset industry back then, right? Sounds amazing to think of it. Copper was being engineered out of its two main uses, which is plumbing, which is being replaced by plastic, and cabling, which was being replaced by fibre optic. It was viewed as, well, you know, this is where we put the junior guys. Not very interesting. The market's getting smaller. You know, it was a sunset industry, and obviously, you know, computerization, digitalization has kind of reinvented the copper market from that point of view, right? And a lot of these metals were regarded as uninteresting, shrinking, old technology, if you like. Everything was going to be plastic or fibre optic. I mean, the new generation of materials of the 1990s, which is why sort of very few people knew anything about the London Metal Exchange back then. I mean, and even within the LME, something like copper could be deemed, well, that's not that much, very very interesting market. Now we think it's the most interesting market of all the enemy metals, right? So yeah, no investment interest in it, no fund interest in it, a real backwater, even within the backwater that was commodities at that stage. And that's what, of course, has changed 100% over the last 10, 15 years. As you see, sort of like, I mean, copper's electrical properties have made it sort of like, I mean, a core metal now, right? Mm-hmm. But that wasn't the way anyone saw it back in the 1980s. This was kind of like an uninteresting backwater, and most of the metals will probably be phased out over time or engineered out. Yeah.
Yeah. Right. So I assume like a metal like alumina was very hot at the time.
Yes, but I mean, sort of very hot would be kind of that's kind of like our hindsight view. I mean, it was probably less dull than some of the other ones, right? I think is how I would describe it as. Again, you know, I mean, it was the relatively new metal back then, but I mean, it only started trading on the London Metal Exchange in about 1987 in terms of as a global contract, right? Sure. Again, this was, this at the time was probably regarded as the next best thing, but there were still small markets. I mean, this was before China even sort of built its first smelter, if you think about it, right? Think about it that way, right? I mean, we have, this is a 60 million ton market now, most of which is in China. They hadn't built any smelters by that stage, or if they had, they were just kind of like village smelters, open air furnaces, things like that, right?
Right. You just wrote that didn't they just bring a new one online, a new smelter online?
Chinese can bring a new smelter online for aluminium in the space of about five or 6 months. No one knows quite how they can do that, but I mean, obviously, it's just that's where the knowledge base exists now. These are the guys who have built more smelters than anyone else in the world over the last 20 or 30 years, right? They got very, very good at it. And their technology is really good, right? I mean, this is the old days of, they just sort of like, rip off Western technology. That doesn't apply anymore. These guys have evolved way beyond where most, very few people build aluminium smelters outside of China anymore. And if they do, they normally need some Chinese input into making it work, right? So, these were small markets back then. I mean, and very volatile, yes, but the volatility was nothing in comparison to what we can see these days, right? I mean, they really were quite slow-paced. The London Metal Exchange, there was no electronic trading when I started, at all, right? It was all just done on the open outcry rings in the middle of the day. So it kind of really felt like a relic of a market, for want of a better expression, right? The only thing that kept it interesting is the London Metal Exchange has a great history of lurching from one crisis to the other, which kept us as journalists quite busy. So I joined just after the tin crisis of 1986. By 1996, we had the Sumitomo copper crisis, and obviously, that tradition still goes on now. We're just waiting judgment today from the High Court about the nickel crisis, right? But with those rare exceptions, not a lot sometimes happened in these markets.
Right. Well, obviously there are a handful of events that have happened, and I'm really curious about this kind of, maybe not less chronological, but how things are connected, and with the fall of the Soviet Union, what is now Russia, and actually those Soviet assets being left to the oligarchs and then being spread and creating massive companies, for example, the Glencore we see today, that has evolved, and that for the last 30 years we have had Russian supplies coming online. Well, that's obviously come to an end since the Ukraine war, and so that supply, I guess you can maybe shine some light of where that is today. And then obviously the importance of China within those geopolitical dynamics of the metals trade and how that kind of fits in. I mean, it seems like we've come full circle almost in the last 30 years.
Yeah, I mean, I think you're right. It's been one of the most transformative periods for metals was the 1990s, and what you really saw was the integration of the Soviet metal system into Western markets. So I'm old enough to remember the days before the Berlin Wall came down. The interaction between West and East, and Russia was the East then, was very limited. I mean, essentially what it came down to for most of these markets was much of the production within Russia went to the military-industrial complex. Every year, now and again, they would have a big chunk left over, which they didn't need. That would just be tendered out to the West. I mean, the likes of the Glencores or Mark Rich in those days would bid for that. That happened maybe once or twice a year, and that was pretty much your interaction. That's how the two systems talked to each other. Was we got a bit of excess, we'll just sell it by tender to the West, and that nothing more. So after the fall of the Berlin Wall, what you saw, albeit in an extremely messy way, in the case of the aluminium business over there, was the integration of that system into the physical supply chain in the West, but also into the financial supply chain in the West, by which I mean that, the old Soviet system didn't really hedge its price risk. It didn't need to. It was operating under a different centrally controlled model. So as the metal started flowing more regularly to Western countries, so they understood that they needed to be more financially active around that flow of metal. So that was a big booster for the LME as well, right? So we go from the 1990s to the 2000s, and we see the integration of the Chinese metals industry closer to the West, right? This is the great globalization. So again, when I started, China was a non-player in metals. Whatever happened there was similar to the Soviet system. It stayed in there. It rarely came out. Stuff rarely went in. They were almost self-sufficient, if you like. Again, there was no financial level interaction with the West. And that, of course, completely changed in the 2000s as it went on this huge industrialization and urbanization program. To do that, it actually needed metals from the West, right? So it had to integrate, as it were, trade flows with us, but also, similarly, as always happens when the physical metal starts moving, people start thinking again about the risk of price around that metal, so China became more active in the financial sphere of metals as well. So this is the great globalization of the metals industry. Like first the Soviet Union became integrated to the West, and then China became very, very active in terms of its metallic relations with the West, if you like, right? And you can maybe follow this to maybe the great financial crisis when we saw peak globalization. And metals were a great example of this, right? I can mine this stuff in Chile. I'm going to ship it as raw material to a smelter in China, which is going to make it into metal. It's going to sell it to the guy who rolls it into a mean tube, right? Who's going to sell it to the guy who makes the air conditioning units, who's going to ship it back to Chile. Right? Think about that. And the whole world of metals was operating that way. China became the workshop, metallic workshop, right? And you're right. We are now past that, what I would call peak globalization of metals, and we're not going back to the old Eastern Bloc, Western Bloc days yet. But what you're seeing is parts of the system want to be more autonomous. So the US does not want to be so dependent on China as the workshop of the world, right? The European Union is talking about strategic autonomy. We're going back into a more fragmented market, if you like. I don't think we've gone quite all the way back to the 1970s or 80s yet, but you can almost feel that this globalized system is being pulled apart a little bit. And by the way, this is on both sides, right? Just as the US is worried about its dependency on China for some metals, China's worried about its dependency on the West for some metals, right? So everyone's kind of pulling away from the globalized model a little bit. It's a messy business. It's very, each metal will have its own dynamic. Some you can't decouple. You can't fully de-risk. As the US is finding out now. But just in terms of, say, something like copper, I think we moved from 3 or 4 discrete markets in the 70s. So the US would be different from the European market, which would be different from the Asian market, which would be different from the Chinese market. And then there was the Soviet market, right? And we went from there to, say, around the turn of the 2000s, 2010s. This is a fully globalized system now. We have Chinese players, we have Russian players, everyone's involved. I think we passed that moment. Yeah, I think we may be moving back to more regional dynamics It's not that everyone's going to suddenly stop trading with each other,
right.
but for me, there's just tectonic forces pulling that globalized supply chain into new shapes, if you like, right? We talk about now sort of Russia. People are obviously more reluctant to take in Russian metal. Everyone has their own sort of moral compass on this one and their own economic compass, right? But equally, Russia's not kind of just sitting idly by waiting for its metal to be rejected. I'm seeing a much closer sort of like movement of trade between Russia and China on some metals. Makes sense, right? I mean, if they can't sell it to the West, where else could they sell it? So you get this sense of shifting economic blocks and economic models now in what was really a seamless, globalized, marketplace.
Right. Well, and I guess the obvious follow-up question here is, Andy, is the capacity of the West to bring a lot of these supply chains in-house. What is the smelting capacity we have now, and compared to what we would need if demand would stay level? But with all due respect to the supply, or excuse me, the demand looks to be just jumping leaps and bounds here in the next 10 to 20 years if we're just talking copper. But on the back of that, just this simple capacity observation would be: do we have the political will to even reach what is needed to reach that capacity that will be needed in 10, 20 years?
I think my feeling at the moment is, certainly in the US with the European Union playing catch up, the political will is absolutely there. But you kind of run into, technical and engineering issues. Let's actually take aluminium in this example, right? Aluminium is very interesting. So you can go back to the days of Donald Trump. Remember him, a guy called Trump?
Very much remember Trump.
Yeah, okay. So, Trump sort of like put tariffs on aluminium imports, right? Across the board initially, then he allowed some exemptions in. This was to really explicitly try and rebuild or create the conditions to rebuild aluminium smelting capacity in the United States, right? The US had about 30 smelters at the start of the century. It's got about, I think, last count was about 9, 3 idle, right? So this is where Trump's view was: this is national security. We need to sort of create the environment to build more of our primary aluminium here, and particularly military-grade aluminium, right? So we're going to put tariffs on everything to create a wall around the US industry, right? Not one aluminium smelter has been built in the United States since those tariffs came in. Why is that? We don't have, the technical abilities that we used to have, but more importantly, if you want to have an aluminium smelter, primary smelter, you need a lot of power, right? Because this thing just soaks up power 24 hours a day, right? This is the nature of the electrolysis program. Does the US have spare power to run an aluminium smelter? To which the answer I would say is no. I think Kentucky had a hard look at this a few years ago. It probably came the closest to maybe sort of thinking about a new smelter. Decided it didn't have the power availability. So without the power, you can't make aluminium. So it's not just a simple saying, the will is there, absolutely, to build aluminium smelters both in Europe and in sort of like the United States, but we're in a power deficit situation, right? Just generally. We're also trying to green our power, which is creating more stress on the power grid system, right? There is simply no power capacity that would allow a new primary aluminium smelter to operate in the United States. However much you wish it, whatever tariffs you put around it, we just kind of run into this wall, right? Oh, excuse me. No we run into the wall. It's no power, my friends. You can't build a smelter.
But the solutions are obvious and there. I'm not saying you go out and you have to build a new natural gas or coal-fired power plant. Is there an opportunity for nuclear energy to come in and fill those gaps? Obviously that comes with a massive bill to get that done. But it's, it just seems so obvious that if you were really serious, then let's get going.
Yeah, I think what the US has the route it's travelling now is kind of, like I said, after sort of 7 or 8 years of trying to protect the domestic market. No smelters, right? There are two obvious alternatives here, right? One is to friendshore So you look over the northern border of the United States and you find the Canadian hydro system, right? And they obviously have many smelters operating up there, and I suspect have room for another one or two because of that dedicated hydro resource they have. So rather than sort of like trying to break the power market on your home soil, why don't you go to the guys who do have excess power, or have the ability maybe sort of like to fit another aluminium smelter in, and go and talk to them about it. Equally, if you go to the southern side of the States, what do you find? Mexico, huge recycling area. Always been like, so maybe the simplest solution, if I was a US policymaker, I'd say, okay, look, I just don't think we're going to get, short of building, as you said, unless we build new nuclear plants dedicated to aluminium smelters, why don't we take a different view of it? We've got the Canadians for the primary metal in the north, we've got the recycling capacity in the south, we have the North American Free Trade Agreement. Friendshoring then becomes your answer rather than just absolutely reshoring. And that's just the very dynamics of how to make aluminium, right? And the Europeans may have a very similar sort of like issue here. Obviously complicated by the fact that their biggest supplier has been Russia up to now. Okay, so that puts them in an even trickier position. So each metal, that's what each metal will have its own dynamics. Some is doable. So, for example, let's look at rare earths. The US was the largest producer of rare earths. Back in the 70s, 80s, 90s, right? But it closed its mines, it closed its processing plants. The deposits are still there, right? So the idea of, we can sort of reopen mines, we can build new processing plants in rare earths. Yeah, that's happening, right? And because you don't need the same level of power and you've got the resource in the ground still in California, that's an easier one maybe to kickstart because the resources never sort of migrated to China. You've still got it in the ground. You just got to work out how to process the stuff, right? And you'll find now that I think with the help of the Department of Defense, they are building heavy and rare earth separations plants now in the States. But some, as is like aluminium, it's just without the power, you don't even get started on the conversation. So in terms of, and I think that's why you've seen now, a slight change of tone from one of, we want to bring everything home. We want to reshore everything as much as we can. It's not going to happen, my friends. So you can do as much as that as you can. Then you start thinking about friendshoring, nearshoring, and what people call now de-risking, right? So we cannot be, the US is probably not going to build any new aluminium smelters, but you can de-risk the supply chain. So if you have been relying historically, say, on Russian raw material and semi-manufactured fabricated goods from China, you can deal with that. You can sort of use tariffs to push those two away as a supply base for North American consumers, and you can sort of emphasize more on, say, Middle Eastern countries for aluminium or South American countries. So just changing your import mix, de-risking, I think, is the key word here. Now, decoupling's, you can't decouple some stuff, right?
Sure. No, that makes sense. There's a happy medium in there someplace, right?
I think the key word is de-risking, right? So we're not going to stop the Chinese building new aluminium smelters or producing as much as they can, but we can stop that flooding into our country and at cheap prices and knocking our guys out of business, right? We can do that.
So what with the relationships that are kind of stuck in the middle between East versus West? You've got obviously a long-term relationship between the United States and a number of countries in South America, but you also have China's Belt and Road Initiative, which has already cut through Africa, jumped the ocean, is finding its way in South America as well, in a number of countries. So what some of those companies are kind of caught in the middle between the United States and China? Are they going to have to kind of walk a fine line here in this whatever renewed supply chain looks like between those two areas of the world? Are they going to have to make a hard decision which side they kind of play ball with?
This is what I would call now the great game of metals, right? The great game was goes back to the 19th century, was about who controlled Afghanistan, the route to the British Empire in India, right? It was called the Great Game. The British were involved in it, the Russians were involved in it, everyone was involved in this, playing around for who could control Afghanistan. We're seeing something similar now. And for those countries caught in the middle, it's a great opportunity, right? So, opportunities knocking on your door from two sides, if you can play that, right? Mm-hmm. So, and sometimes it's going to be disruptive if you can't play that correctly. So, for example, let's take another metallic example. Let's look at cobalt, right? All the cobalt in the world pretty much comes from the Democratic Republic of Congo, which the Chinese moved very aggressively into about 5, 10, 15 years ago. They wanted the copper and the cobalt, right? What you see now, I think, is greater Western interest in that country than has ever been the case before, both from the Europeans and from the United States. I would suggest there are quite a lot of US officials currently based in the DRC. Why are they there? They're there because of the metals, right? And I think it's no coincidence that you've seen quite aggressive pushback by the DRC government against some of the Chinese entities there, right? Which is kind of, we want you to come back in, and we want to renegotiate the contract we gave you, right? Because we gave you far too much, both in terms of sort of like being share of revenue, but also they allocated huge amounts of land to the Chinese, which are thousands of square miles around a mine. You don't need all that stuff. So you can see these shifts playing out as the DRC is being courted very aggressively by the United States and by the European Union. It doesn't mean they're going to kick the Chinese out, and they can't legally kick the Chinese out, but what you might see is a rebalancing towards Western investment in that country from purely largely a Chinese investment. It's part of the great game board that can be actively sort of like played by both sides, and there's quite a lot of countries in that situation now, right? Mm-hmm. Chinese have probably got the foot on the ground first because they were way ahead of us in terms of their energy transition anyway, so they moved aggressively for lithium and for cobalt. You're now seeing the US and Europe in particular, obviously they want to muscle into those countries, right? And they're going to try and offer, I suspect, a different sort of investment package. And you see that in the DRC. I think there's a lot of conversations around artisanal mining there. The artisanals tend to feed into the Chinese smelting network. I think the obvious pitch from a European Union point of view would be, well, the artisanal thing's a problem for you. At the moment, it's because of the way you structured your industry. What if we kind of made an ethical investment into a cobalt mine under our guidance? That would be good for you. That would be good for us. So the ethics become part of the toolkit, if you like, of competition between, the Chinese model and our model.
Right. Well, and there was news, 2 weeks ago, that the Chinese came into Botswana and bought Khoemacau for almost $2 billion. And that actually came by pretty quick. I know, knowing that project and a couple of people from that team pretty well, I know, they had been working a long time trying to sell that asset. So I think the timing of it just kind of caught me by surprise. I didn't see. I guess I didn't expect it to be coming then. What surprised me the most was, it is a Canadian domiciled company that's being sold to a Chinese producer, but it's obviously in Botswana, and I don't know if there's any sort of if there's anything a government can be said about that. Given that it's in Botswana. Obviously, the Canadian government has something to be said when a project up in the north and none of it was being sold. That was off the books. But now, because it's in Africa, I suppose there's not much they can do about it.
Yeah, but remember, if we go back 5 or 6 years, even a Chinese entity buying a Canadian mine was on the books.
Absolutely.
There was no pushback.
Well, it still is on, but it still is on the books, as long as it's not in Canada or the US, right?
And same in Australia. So that's how it started, right? It's like no more investment on our domestic soil, right? Protect what you have first before you start going and competing for the open parts of the board, if you see what I mean, right? So again, everyone's on different timelines here. The Chinese timeline is they've been doing this for 15 years. And by the way, I personally suspect, every time China makes an investment in this space, it's always about the Belt, One Road. It's not, I'm not sure I completely buy that, despite the rhetoric that sometimes goes around it. I think the reasons that MMG kind of pounced on that mine, I mean, they've been looking, that's their fear of Chinese competition. Right, I think the Chinese have built too many smelters for copper, and everyone has suddenly kind of looked at each other and go, hold on, we built so much, guys, where the hell are we going to get the feed? So the competition within China can be a major driver as well, right? Because if I don't get it, he's going to get it, and then I won't be able to get that feed off him, even though we're all Chinese state entities. Don't underestimate the competition within China.
The internal dynamics.
The internal dynamics, I think, were a real driver behind that. I mean, they just kind of, as I said, there seems to be a realization that, hold on, we can't keep on building copper smelters because we haven't got the resource in China to feed them. And every time we build new capacity, we're going to have to go out somewhere and buy it, right? And you've had a suggestion just in the last couple of months that the Chinese government's going to put a cap on copper smelter capacity in China. What does that always mean in China? When the rumours are everyone who's even thinking of a project is going to go and try and do the project now because they know that there's some weird deadline's going to come down where we can't do it anymore. That, of course, no point in building a smelter if you can't get the feed. So I think actually that specific one, the internal dynamics of the Chinese copper market are probably as significant as any strategic Belt and Road there, right? There's always going to be a mixture, and you always get the rhetoric of Belt and Road around any overseas investment, because I'd be blunt about it. If I want to borrow a lot of money to sort of like expand a copper mine, and I'm going to go and tap one of my state-owned Chinese banks, it's much easier for me to say, this is the Belt and Road Initiative, which you have to lend me to me, rather than just say, I want to do one over on these two guys so they don't get, that's where there's always rhetoric, which is along those lines, but never underestimate right now fear of physically missing out by Chinese smelters. And they're looking at each other more than anyone else, right?
Right. On the back of underestimated, I do want to talk about possibilities of overestimating, and I keep on thinking about this long-term supply-demand of copper. And obviously, everybody who's listening to this conversation has probably seen the chart where, demand for copper goes up to the upper right-hand quadrant while supply continues to stay lower. But I just keep on thinking, if we can think 20 years down the road here, Andy, and think about how many projects, obviously large capex projects that need to be built, that will need time to get built to bring more supply on. But on the back of that, I'm just kind of curious about this metallurgical technology a number of companies are working on to process sulfide copper mineralization as well. If these things continue to kind of work together in tandem, does that, if there is a lot of success in these areas, obviously that supply gets a lot higher than what we originally were projecting. Is there a legitimate educational, constructive concern that maybe we oversupply the copper market in due course with all this kind of focus in copper?
That chart, those charts that you're referring to, they've been around since the early 1990s, right? So the world has always been running out of copper, right? And why? Because we tend to think in terms of new mines. All right, so we can extrapolate demand, and we always say, well, therefore we need these new mines to come on. And one of the problems with new mines is you don't have great visibility beyond, say, 3 or 4 years hence, because the capex decision hasn't even been made at that stage. So you always seem to be running short, right? And that's always been the case. Simply because we don't get good, it's very easy to extrapolate forward demand curves, and to understand that dynamic and to be able to put with some estimates around it, we can say, well, if copper usage is kind of on a long-term trajectory of 4% CAGR, we can come up with a fairly realistic projection of 10 years' time. You can't do that for supply, but if the decisions to invest in the mines haven't been made and no one's told you, Rio Tinto could be sitting there with 5 great mines, but until they say, we're going to actually invest in one of these, how you wouldn't know anything about it, right? So visibility is one of the issues behind those charts. But I think more fundamentally, where people kind of get fixated on new mines, we need 10 more Escondida mines. There's 3 other things we should be thinking of. One, expansions of existing mines, right? Which is, for any producer, the easiest capex option. Those we don't have good visibility on those, because those tend to be very dynamic decisions made by each company board. It may even be dependent on, hey man, we just hit another part of the deposit we didn't even know was there. It's much richer than we thought, so it's a no-brainer to spend a little bit of money, just lift our processing rate. So again, that's one obvious option here. Like, there's a lot of brownfield expansions that are possible, but again, no one's going to know until they're announced. There's very, unless you have a detailed knowledge of every individual deposit and how it's looking from almost in real time, you can't even start to wonder, well, how many sort of like expansions of existing mines might be possible, right? That's too dynamic. Secondly, if you look at the kind of the history, man's history of copper mining, right? It falls, obviously it is eminently recyclable. We have lost some of it, but a lot of copper is still in use, or if it's not in use, it's still there. I'll give you an example. We're doing this interview just next to a big park called Finsbury Park, right? 6 months ago, they ripped up underground copper pipes there for an old telephone system, right? Okay. Those pipes hadn't been used for 30, 40 years, right? It's just literally sitting there, pure copper underground, right? And obviously, that's a bull market, because even London decided it's actually worth digging up the park and getting that. So never underestimate how much more an efficient recycling system could generate.
Right.
Yeah.
Right.
What we tended to do, if it's pure copper, we can recycle it. If it's got any dirt on it at all, we send it to China, right? Well, that needs rethinking. But the other biggest component of copper that's gone missing, if you like, is the stuff we never used. Huge amounts were left in the mines. Go back 30, 40 years. Think of the technology that was used in mining then, right? And, let's say we're mining a sort of like, a high-grade deposit, right? But then, as we know, over 5 years, the grades go down. We've really got the crown jewels of that deposit out. In those days, we probably walked away from it, because it was simply not economic at a certain grade. We didn't have the technology. Smelters couldn't treat the stuff. So we just left it.
Right.
Think how many mines we didn't fully exploit, right? And I think one of the most interesting aspects of what's going on in the United States at the moment in terms of the critical minerals debate there is the USGS has been tasked with, you go to every disused mine. You go back to even the stuff, the gold mines in Colorado from 100. Go and find out what we left behind. Not just for the primary metal, there was one. What do they put in the tailings? Because again, it was one product mining in those days, right? So I found a copper deposit. The only thing I'd probably consider 30 years ago as a byproduct was gold or silver. It came in because for obvious reasons. But I mean, what about, what if it had tellurium in it? What if it had sort of other stuff in it that now we regard as critical minerals? Well, we left it in the ground, we put it in the tailings dump. So how much is there which we don't even have to mine? We just go back and look again at what mankind has left behind. And I think that's one of the most interesting supply dynamics. Now, you've got a couple of fairly junior companies out there now who are really sort of like trying to revolutionize leaching technology. Yeah. Just say, okay, you go back 10 years at a certain grade, we just did not have any ability to get the copper out. That's changing.
It is.
And that's changing, and for the same reason. Look, the hard stuff's been done. You've dug the shafts, you put the infrastructure there, you've closed, but the stuff's still there. Right. All the big capex has been spent. The question becomes is, what did we leave behind, or from generations ago, and can we now use new technology to get that stuff out? That may be one of the simplest, smartest answers to copper supply shortfall that you could think of, right? Yeah, as I said, all the hard work's been done. They built the shafts, they went a kilometre down, and then just at that time they left a lot of stuff in the ground because it wasn't economically viable. It could be now
Yeah.
So that's kind of a long way of answering the question, by the way.
No, I keep on going back to this leaching technology. You did mention there's a couple junior companies that are working on this, but obviously Rio Tinto is a huge player in this. They're no junior company, and so everybody has their kind of trials going on in different projects throughout the world right now. And I'm thinking about as an investor, am I more interested in a company that is partnering with another junior company that's specifically, a technology company that has no assets, that has no, background in actually mining and producing metal? Or do I want to look at a company that does partner with Rio Tinto and their Newton technology, knowing that Rio Tinto can go in and build a mine, probably, I think, a lot more efficiently and than a junior technology company, right? And so And I guess that's not really a question. That's just kind of me openly talking about how I think about this. Obviously, a lot of work and success has been done by all different parties. But if it comes to the day, you're going to have to mine it. And so why not really focus on working with a company that has a history of mining with this new technology?
Not only a history of mining, but might have the resource there in a tailings pond.
Right.
I mean, if you look at sort of across the critical mineral spectrum, for example, you look at something, I think it's tellurium, isn't it? With the US, it's like, the US military wants tellurium. We haven't got any tellurium. Until Rio went, you know what? Our Kennecott smelter can produce that just as a byproduct slag. Would you like us to capture it? It's gone, well, if you go, you might as well. Why not? And they did the same with scandium, didn't they? I think at their Canadian sort of industrial minerals, industrial sands things. So you want scandium? Well, actually, it's in our tailings pond. We didn't read it. We just threw it in there. It's not a big market, but it's just there. So again, it's not even a case of sometimes having to build the new mines. It's kind of going back to, what did you leave in your tailings pond? Have you actually done a proper assay of it recently? And if you haven't, that's a good time.
Right.
That's a really good time.
Sometimes one man's garbage is another man's reward.
And that is we're finding that more and more in critical minerals specifically, right? Whether recycling or going back to tailings in particular and saying, what do they leave behind? Because some of that stuff was probably valueless 30, 40 years ago and is now deemed to be a critical mineral. It's there. We just got to work out how to get it out. We don't even have to mine it anymore. It's just sitting in the tailings pond, right?
Right. I do want to ask you about Argentina with the election that just happened a couple of weeks ago. But before I do that, I want to make sure I say that so I don't forget, because I think it's an important part of the market. But I'm just kind of curious, out of these unique metals that all of a sudden are gaining interest, what are the few, you mentioned tellurium and scandium, what are the few that are starting to pop up in your conversations that maybe hadn't been there 5-10 years ago?
Those that China is putting the pressure on supply first and foremost, right? So we this year, for example, you saw China announced export controls around gallium and germanium, again, to really esoteric metals, right?
On the junior side, all of a sudden we had junior companies we have germanium.
And no, absolutely. So, and then sort of the US, which has spent about 3 or 5 years now, really looking in great detail about its mineral dependencies, right? Suddenly germanium, we need germanium. We're not much of it, but we don't have it. And now, these guys produce it all. And these guys will just put export controls on, right? So weirdly enough, the topicality of critical minerals is actually being driven by China's control and of those mineral supply chains, and its increasingly aggressive control of it. So we also have graphite in the last a few weeks, right? Controls of graphite exports. Then of course, we didn't realise that China produced all the graphite in the world. Your electric vehicle battery won't work without it, my friend. So it's slightly random. The world is kind of waking up to a lot of metals with weird and wonderful names and weird and wonderful parts of the old chemical table, which the man in the street had. I knew nothing about gallium until the Chinese said they were going to cut off supply, right? Yeah. And then you go, actually, no. For specialist applications, we do need this stuff. So the topicality is being driven by China's dominance in this area more than anything else. I mean, rare earths, top of the list, because of course China in 2010 did restrict exports of rare earths after its dispute with the Japanese. I went to the World Trade Organization, got found against, and reluctantly, I think, allowed them to flow again. But guess what? Yeah, again, they're talking about maybe we're going to restrict rare earths. So that's sort of the underlying sort of dynamic here. Is China has grown just as it's dominant in copper recycling, because we allowed it to become the world's workplace for the stuff that we didn't want in our own backyard, right? Even more so for some of these esoteric metals, right? You got to look back at why the rare earth mine closed in California all those years ago. Well, it was years or so, like leakages, spillages, some of them toxic, etc., etc. People just say, we don't want this in our country. Send it to China. We'll just buy it from China, right? We all know they have lower environmental thresholds at that stage than we do. And what you're seeing over the last 5 years is the great metallic awakening, when actually, no, we really do need this stuff, and we cannot rely on one country for our supply, particularly when we have identified that country as a long-term strategic challenge to the United States. So so that, as I said, it's the Great Awakening. I mean, that includes at all levels of government as well. I mean, it's only about 5 or 6 years ago the U.S. military has really woken up and said, okay, we need to think hard about our ability to fight a modern war with modern equipment and where we get our supplies to do that, right?
Yeah, tungsten's the first thing that pops into my mind when you just mentioned that.
I mean, or titanium. I mean, you can really. I mean, I think there's 50 metals now on the U.S. critical minerals list.
Yeah,
50. Think about it.
Yeah, amazing. Okay, so let's talk about Argentina, because this has really been fascinating on a geopolitical standpoint. Obviously, a lot of people woke up and was surprised to see Milei win. With the conversations and the sources you have on your side, I mean, how does this change mining and exploration in the country of Argentina, and what is kind of I guess, do you call him president-elect now? But what is his stance with resource development in the country?
Well, I mean, I think Argentina is one of those countries that is going to be, as I said, people are knocking on the door, right, because of the lithium there. The US has a slight problem insofar as I don't think it has a free trade agreement with Argentina, which means that it cannot qualify for the IRA sort of subsidies on the EVs. But evidently, this is a classic example of Chinese first mover into the lithium industry there, rapidly being called up by the European Union and the US, going, oh, you've got a lot of lithium, haven't you?
Yeah.
We're interested in that. So it's one of those countries that probably was a very minor player to date in the lithium supply chain, but has the deposits, has the resources, and is now being courted by, well, all the major blocks, right? The question then arises is how they want to deal with that sudden interest in their deposits, how they want to balance the existing Chinese investment against a European Union investment.
He also wants to dollarize the Argentina,
and how they want to basically treat their mining sector, right? I mean, you've seen various approaches across Latin America, in particular. What share should stay in the country, right? Do you have a model when the old model I would call it when, come and mine our deposits, take the raw material out and do what you want with it, or do you say actually, as a quid pro quo for you having this deposit, I want you to process it here. Right, and again, everyone is somewhere on the spectrum of this when you look around the world, right? So you take for Indonesia has been very aggressive about saying, you want our nickel, you ain't taking it out as raw material. You're going to process it here, and you're going to keep on up processing it. Otherwise, you will lose your license. Mm-hmm. Argentina is kind of somewhat, for me, is a blank sheet of paper from that point of view. It's really interesting. Like, what we do know is you have a lot of lithium. What we also know is the Chinese, the European Union, and the United States really interested in your lithium, guys, right? And all would like to invest more or start investing, whatever. how do you, as a country, want this to play out?
Right.
Yeah, because it will be up to you. I mean, what royalty rate do you want? Do you want to force people to process within the country? For me, as I said, I mean, these are the questions. I have no answers from the incoming administration of Argentina, but it's going to be another great litmus test, if you like, of how fortunate countries who have the right resource can play this great game. I mean, you look at, for example, over the border, at Chile, it's decided it wants to go down a nationalization route for its lithium, right? Just as it did originally with its copper, when it formed Codelco to mine its copper. It said, we want to have this as a state entity, if you like, a state asset. That's one option. I would not expect Argentina, which has a more free market philosophy and a background to it, to go down that route, right?
He doesn't seem like the kind of guy who go back on his word. If he's campaigning on anti-socialism and total free markets and capitalism, I mean, I think, boy, for him to, if he would ever to come out and start kind of nationalizing anything from lithium to copper, any sort of resource, I think would go back on what he campaigned on.
And it makes no sense either if you think about it strategically, right? If you know that your neighbor has nationalized and therefore will inevitably slow private investment. I mean, just through the mechanics, it doesn't mean I can't be a private company invest in Chile, but that means I have to go through a certain channel via the government to do so, right? Yeah. If you know that's going on in your neighbor, why would you replicate the same? Yeah, it gives you the opportunity, if you think about it, say, no, this is going to be a much more investor-friendly country, particularly in the resource sector. It's an opportunity for you to win by being more liberal than your neighbours, if you think in those terms, right? But as I said, I mean, these are, it's not the only country, but right now it's an obvious one, which is going to, you have the right stuff in the ground. How you want that to be developed, how you want to balance Western interest against Chinese interest, your own country's interest against, revenue share and all that. That's up to you guys. I mean, and it's going to be a really interesting test, I think. I agree with you. It's going to be, he will definitely not go down the Chilean model, right? It makes no sense. I mean, as you said, he's not from that background. So let's just see. I mean, let's see, where they go, where they end up. I mean, obviously, you've also got to be very acutely aware now of environmental pushback on your home soil. They just closed the big Cobre de Panama mine this week as we speak about it.
Yeah, we haven't even talked about that.
So, I mean, even if you can get your investment climate right, what I think the big difference now between where we are and where we've been historically is you've got to bring your people on side with you. Yeah, you've got to be seen to strike, inverted commas, a fair deal. And I think that's one of the big issues within Panama. They were seen not to have got a good deal for the country.
Yeah, they voted it was unconstitutional. Their lease was unconstitutional. It's just shocking that through everything that mine's been through in the last 10, 20 years, now is the time. It escalated so quickly, not only from a local population standpoint, but then you have Leonardo DiCaprio coming down there, and then all of a sudden the court calls this lease unconstitutional, and it goes to show you just how quickly a project can die.
Yeah, although I mean, funny enough, I wrote about this last week. I mean, that I think concession, the original concession was awarded, I want to say 1996 or 1997, something like that, right? And it was only really moved to what we call project stage around the early 2010s. There's always been a problem around the award of that concession, and this is, it's been simmering for many, many years. I could find a reference for a Canadian NGO going back to 2010, specifically talking about that project in terms of environmental degradation. So it seems to have exploded very fast, but it's never been well rooted either within the Panamanian law books, or they never seem to have won over the environmental argument over 15, 20 years there, right? So the roots of what we see now were there from the start. Right. And in many ways, this ruling goes back to the original concession award in '97 when it was closed. tender, so only one person was allowed to take it. This is kind of not obviously, with hindsight, how you would want governance to work. So, but that's the other dimension. When we talk about Argentina, we talk about anyone. You've got to get your ESG right now. So it's not just the old, come in and mine my land and sort of like, and pay me a nice revenue and we'll put a tax on you and all that. You've got to get the package right around it, right? Governance, ESG, everything. You've got to have the guys in your country and the local communities on side. And if you don't, why are you sticking 10 billion into the ground? That's a waste of money, right? There is... The legal status of that mine has never been fully settled from day one. Now, I know First Quantum could argue, no, it's fine, we were in negotiations, From my point of view, from looking from the outside in, I said at no stage could you have sat down and been 100% confident in the governance and the status of the mine within Panamanian law. You may have thought you were 100% confident. The government at the time may have said, don't worry, we'll renegotiate, it'll be fine. But I don't think at any stage could you have 100% confidence that this is all this is good, it can't be challenged on this. So it feels like it's exploded, but like all these things, you can trace the roots back many, many years. I mean, it was always a controversial project within Panama. Both at the environmental level and at the constitutional level, right? All you've seen is that just snowball outrageously over the last year or so. Well, not even that, 6 months or so, right? But for me, the lesson is, if you don't get your ESG right, I wouldn't put $1 of my money into the ground.
Right. You've been on this beat for 30 years, and it seems like this is the most exciting time that you've ever experienced in your career.
Absolutely.
Yeah, it's just absolutely fascinating.
As I said, we're entering, for my opinion, a new metallic age, right? I mean, you've got the combination of decarbonisation, but you've also got what they call the next industrial revolution, Internet of Things, right?
And information's flying at you at an incredible speed.
I'll give you another great example here, right? So, I mean, probably about 7 or 8 years ago when I was working in the office, and sitting next to my boss, he said, I see you put out another tin column. He said, is it really worth 2 minutes or 3 minutes of my time to read? I went, probably not, mate. There's only about 30 people in the world who can read a tin column, right? Because I know most of them. Right? It's a very small market, established producers and all that, right?
Right.
Last time I put out a tin column, it went, as I think the kids say, it went viral on the internet. And why is that? Because tin's got a new usage. Everyone thinks of tin cans, right? Tin cans.
Solar.
Yeah, that's it. It's solar. Tin cans now, 13% of global usage. Circuit boards, soldering, 50%. None of the equipment we're working here today was working without tin solder, right? I mean, nothing on the internet works without. It's the glue they call it the glue of the internet. Internet, the hardware side of the internet is your circuit boards. No circuit boards without tin holding the whole thing together. So suddenly you've got this ancient metal. I mean, man's been mining tin for as long as, you go back to Phoenician times when they used to send ships up to Cornwall in the UK to get tin, right? Yeah. Obviously to make bronze in those days. But here's a metal which seemed again to be a sunset industry, yeah? And now we realise, because the world has changed, and we need circuit boards, we need electronics, and we need the tin to hold it together. It is a new age metal, another tin age. That's just one of many examples. The whole metals are being reinvestigated, if you like. I don't think there's ever been so much R&D into metallics uses in my career. Everyone's gone back. Everyone's looking at battery technology. Everyone's looking at tin again. Because tin has some other weird properties, you know what I mean, in terms of sort of like, I mean, it can soak up toxicity from contaminated water in tailings dams, for example. Who would have thought it? There was no incentive, if you like, to go and do that research 15 years ago. Right now there is, right? And you can make, tin's a great example, but it's happening in virtually every single metal you can think of. We're looking again. What else could this stuff do, right? We know it can do X, Y, and Z. We knew tin was good for tin packaging. We didn't know 20 years ago that it was going to be good for soldering because hardly anyone used circuit boards, right?
Right. Oh.
And that's the metallic revolution. So we're finding lots of new uses for this stuff that's been around with us for literally centuries. And the new uses are being driven by the way society is heading, as I said, particularly decarbonisation is one megatrend. But people forget about the Internet of Things. That's another big industrial revolution that's around our corner. It's going to be wired by copper and silver. It's going to have tin and soldering in it. I mean, you name it. It's going to have aluminium packaging around it. They're all finding new uses.
Well, and there's a connection there with research and development institutions of higher learning that are doing a lot of these things, taking an idea and following through on them. Chemical engineers, mechanical, and like all this kind of behind the scenes work that not very few people are following unless you read those journals day to day. So that has the potential to open up new markets within the mine that has an effect on the mining industry.
Completely,
right?
completely.
Yeah,
well, as I said, I call it a metallic revolution. And as in all revolutions, from day one of the revolution, you have no idea what day 100 of the revolution is going to look like, right?
Right.
And so we start off with we want to design a car which doesn't use fossil fuel. We're going to use a battery of lithium in that, right? The original batteries were lithium iron phosphate. And then someone comes up and says, well, but if we put a bit of nickel in there, that's going to be a bit better, isn't it? And then someone else goes, well, have you tried putting cobalt in there because that increases the battery? So before you know it, one thing leads to another. This is the history of all mankind, right? I mean, when we start putting our collective brains together to say, well, this is what we need. I mean, and you open up new questions and new avenues of exploration. And that is going, I said, right across the industrial metal sphere. That's happening now, right? And, we could be sitting here in 15 years' time and maybe tin is no longer used in soldering, but I mean, maybe it's going to be the key sort of way of cleaning up mine waste, for example, right? I mean, I don't know. I mean, all that research is being done. What we do know is copper has always been a great conductor of electricity. I mean, obviously, that's one on the sure bet that's going to remain the case, right?
Right.
Only silver's better and copper's cheaper than silver still.
All right, Andy, thanks so much for your time. Thanks so much for welcoming me into your home. This is a great conversation. I've taken up probably too much of your time, but I want to thank you again. I hope we can follow up again, next year and see how this entire dynamic of the metallic revolution is played out.
Oh, listen, thanks very much for sort of making the effort to come and visit me. And listen, I'm a guy, I'll talk with metals any day. So you can come and talk metals with me any day. All right?
Absolutely. Thank you so much. All right. Take care.
Thank you.